and welcome to this August 4th, 2010 video version of Invested Central's Chart of the Day. I'm Tom Boley, Invested Central's Chief Market Strategist, and it's my pleasure to provide you with today's Chart of the Day. This Chart of the Day is brought to you by StockCharts.com, simply the web's best financial charts. Today we are featuring Horizon Mines, ticker symbol AZK. This is better than the $800 million basic materials company. I do want to let everyone know that they do report earnings on Monday. I'm not sure if that's before the opening bell or if it's after the close, but just to let you know that they do report earnings coming up on Monday. Technically, looking at the stock, you can see the huge move that it made. Actually, if we go back a little bit further before the beginning of this chart here, I think it was on maybe February 5th when it bottomed. We were down, and actually this may have been the bottom because I think it was around 355 or so. Stock ran from 355 up over 580, so it made about a 65% move in just 3 months to the upside. It needed a consolidation. It's gotten it. We went straight down and have since just kind of gone sideways here. And actually over the last 6 weeks or so, we've been in this descending triangle pattern here with the lower highs and the equal lows coming across. On Tuesday, you can see that AZK actually broke out above. It looked like we were going to, on Monday, we actually opened up out of the triangle but then closed back within it. You can see the volume was very light. There wasn't enough volume to support the move to the upside. But on Tuesday, you can see the move was made with confirming volume, and we actually closed at the highest level that we had seen in about 3 weeks or so, and on very heavy volumes, the heaviest volume that the stock has seen since the first day of July when it had this false breakdown. So technically, AZK is making a nice breakout out of this consolidation pattern. We think it's got a chance to run to the upside. We would look up to about could be anywhere in the 522, 523 range, even up to maybe 530. That's going to be your first area of considerable resistance. You can see that on this breakdown back in mid-May when we went down below the 20-day moving average, you can see that we took out this prior candle body right around the 530 level. So now on the way back up, you can see 530 acted as some pretty good resistance on the move to the upside. So I think this 520, 525, 530 area right in there is going to present some challenges for the bulls to try and get through there. But if the volume's heavy and we make the move through a 530, there's really not a whole lot until you get to the top up at 580. To the downside, I just don't want to see us go back down and lose the low that we established on Tuesday, or actually on Monday, and that would be down around 485 or so. So a move back down below 485 would not be particularly encouraging here, especially with earnings coming up on Monday. We'd be a little careful, so watch that to the downside. But again, volume increasing. The other thing maybe to keep an eye on is the MACD, the moving average convergence divergence. If we do see more strength tomorrow, we should see this MACD break up above the center line, get a bullish crossover. That may bring some additional traders into the stock as well. So this one's worth watching. It is a fairly aggressive stock, so it's not for everyone. You can see that on a normal day, stock maybe trades around 300,000 shares or so, 400,000 shares. Tuesday's volume, 666,000 shares, was a little bit heavier than normal, and we'll see if that continues into Wednesday. But the stock did finish very bullishly on Tuesday, and we look for higher prices ahead. I hope you've enjoyed our presentation today. Be sure to check out our chart of the day every day at investedcentral.com. While you're there, sign up for our free weekly Market Pulse newsletter and have the chart of the day emailed directly to you. Happy trading.